Good morning. Welcome to Stock Market Today. It's Thursday, March 28th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. You can head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show, as well as get daily stock ideas for you to consider in your inbox every trading day before the market opens. U.S. equities closed lower, but off the worst levels of the day in Wednesday's trading. Treasuries were stronger across the curve, continuing their recent rally. The dollar was stronger on the euro, but weaker against the yen and sterling. Gold finished down 30 basis points in WTI. Crude was weaker following an unexpected U.S. crude inventory build. WTI settled down 90 basis points on the day. As we get to the desk this morning, futures are slightly higher. European markets are higher following a mixed trading session in Asia overnight. Treasuries are unchanged to slightly weaker after another day of gains yesterday. The dollar is lower on the yen and euro, but outperforming sterling. Gold is down 40 basis points, and WTI crude is off 60 basis points. As we dive in on the S&P 500, what we're seeing is a consolidation around the 2,800 level. You can see we're bouncing back and forth between call it 2,800, 2,850 here over the past couple of weeks. So far, support is holding. Support 2,750 to 2,775, then down below in the 2,725 area. Resistance 2,850 to 2,875, and then back up near the highs around 2,900. RSI remains in bullish ranges, and Chaikin money flow is rebounding. So the indicators are okay. Right now, this looks like a pause within the context of this strong trend off of the December lows. Obviously, we'll keep monitoring it. We are above the 200-day moving average, which is flat. So for all intents and purposes, the bigger picture trend is flat. So how we resolve from here is obviously going to be very important. We see signs that point to a resolution to the upside, at least from an odds standpoint. We want to continue to use pullbacks that hold support to buy very bullish and bullish stocks, our ratings, when those stocks become oversold. Look to leading parts of the market for your ideas, right? Currently leading parts of the market: tech, utilities, real estate. Those are the parts of the market that are outperforming. And then if we drill down, we can see the industry groups that are really holding up well, in particular in tech, like software. We've spoken about it a number of times. Now, your market in a minute, what I'm writing about today: stocks closed lower as the NASDAQ underperformed. So a bit of a pullback. NASDAQ's been a big outperformer of late. So we're seeing a little bit of a pullback in that trend. So far, it looks like a healthy pullback within the context of an uptrend. Treasuries continue to rally. The 10-year yield fell below 2.4%. Global markets pull back to test support. We'll take a look at what that means. Breadth metrics remain constructive in the U.S., especially if we're looking at likely performance over the next 3 to 6 months for the index. Futures point to a flat open today. Power bars have seen a bit of deterioration of late, with the market kind of consolidating and churning here. That is somewhat to be expected. The Dow, 6 bulls to 4 bears. S&P 500 sees the number of bullish stocks fall below 100. We have 98 bulls for 65 bears. NASDAQ, a bit of a deterioration as well, as it's underperformed for the past couple of days, down 63 basis points yesterday. 25 bullish or very bullish stocks, 14 bearish or very bearish stocks. Small caps are a slight outperformer relative to the S&P 500. 390 bulls, 357 bears. Bonds, big rally, up nearly 1%. Again, pushing the yield on the 10-year, below 2.4%. So according to the Chaikin Power Bars, small cap stocks and large cap stocks are somewhat bullish. Major indexes are bullish. Our stock of the day today, Stifel Financial. It's an investment broker and manager. Now, the financials have been under pressure, but that doesn't mean we can't start to look for some potentially compelling ideas should that trend change. And Stifel kind of fits the bill here. Ticker symbol SF, closed at 5160 yesterday, down 35 basis points. Power gauge rating is very bullish due to very attractive financial metrics, very strong earnings performance, very positive expert activity. Technicals been somewhat weak of late. It's a very bullish stock, strong trend, strong industry group. Type of name we want to consider, right? Market and model are in agreement here. As you can see, we're on that very bullish rating, and the stock has been outperforming. Now, we're giving back some of that performance lately as financials have come under pressure, so this $50 level becomes key. Stock is nearing an oversold condition. Money flow is waning. Right, we were strongly bullish, and now we're on the bearish side, but we want to look at the persistency. I think the way to look at this is if you want exposure to financials, this is the type of name you want to consider. It's not a super high conviction idea for me, just given the bigger picture trend in the financial space. But I do think Stifel is a name you can consider if you wanted some exposure, especially if it holds above this $50 mark. I think as long as Stifel SF is above $50, you can be long the stock if you want financials exposure, but just manage your risk properly. You know, set your stop, adhere to it. Should Stifel break below 50, I think you want to get out of the way. Our sector tracker now, looking at the movement of the major sectors over the last 5 days. Utilities, staples, and REITs remain at the top of the list, joined there by discretionary. Those 4 groups are higher over the past 5 days. Financials, obviously, we've been talking about them quite a bit. Yields heading lower, impacting the financials. Materials and healthcare. We've talked about the deteriorating relative trend in healthcare. Energy and materials are seeing their downside momentum wane, but it's taking time to play out. We want to let that trend we want to get confirmation that that relative trend is reversing before getting too excited on those groups. Now, your industrials, tech, and comms, all down over the last 5 days, but they're middle of the road. Industrials continue to hold above support, so we'll stick with our view there for the time being. Our industry in focus today, again, coming to us from the financial sector, is insurance services. Over the past 6 months, subsector has outperformed the S&P 500 by 5 basis points, so call it an inline performer. Its power bar ratio, which measures future potential, however, is very strong. 16 bullish or very bullish stocks for 2 bearish or very bearish stocks. It's currently ranked number 1 of 21 subsectors, and it has moved up 2 slots over the past week. So what we have here are individual names within this group that have solid fundamentals based on our model, but they're underperforming the market. What does that mean? You know the importance we place on relative strength. We want to be keeping an eye on these names, and when they start to outperform, that's when it really gets compelling to get involved on the long side. But it's always good to be running through your names and running through your sectors of the market and figuring out where potential opportunities may lie should trends shift. So within insurance, First American Financial, FAF, Hartford Financial Services, HIG, and Argo Group International, ARGO, all have very bullish Chaikin power gauge ratings. And Argo is kind of bucking the trend of the financials here. Nice steady uptrend. Very bullish stock, strong trend, strong industry group. Type of name we want to consider. Very bullish stock. Now look at the relative strength here is interesting, right? Strong outperformer, then it started to fade, and now it's seeing the intensity of its outperformance pick up. Market and model are in agreement. Dynamic duo in gear here, but the stock is overbought with bearish money flow, so we want to give this time to play out. You have a breakout of this consolidation here. I think $68 is your bogey. As long as the stock is above $68, it makes sense to get involved when this overbought, oversold indicator rounds closer to an oversold condition. I don't want to chase it here, just given the weakness in financials in general, but this is certainly another, again, the type of name we want to consider should the opportunity present itself and we want exposure to the group, or should the dynamics of the group begin to change. Keep an eye on ARGO here in the near term. Yesterday's S&P 500 movers, WellCare Group. Deal with Centene, sends WellCare higher, sends CNC lower. Pulte up on the Lennar print. Lennar, good earnings. Those 2 stocks higher. Home builders continue to do well. PXD, no real news to drive that stock higher. Same with the Gap. Western Digital, didn't see a lot of news there, down 3.6%. Fortinet down 3.5% as some of the software names came under pressure. No real microchip news. Same with ABMD. Now, as I look at market breadth, it does remain constructive. Here's the advanced decline line for the S&P 500, and we can see here that it's trading up near recent highs. That to me speaks to a broader level of participation in the marketplace, increases the odds that the S&P 500 is going to resolve to the upside. And that lines up with other breadth metrics that I'm looking at as well. If we look at the percentage of stocks above their 50-day moving average, above their 200-day moving average, all kind of lining up with the thought of a resolution to the upside. So market breadth here in the U.S. does remain constructive. The 10-year yield did break support. This remains the big story. We've been highlighting this 2.4% level after the break of 2.6%. So what we want to do is continue to look for opportunities in the parts of the market that benefit from declining yields. Those are your bond proxies. Again, to the extent that yields remain under pressure, that is likely to hurt the financials. Now, yields remain below the 50-day moving average, below the 200-day moving average. They are oversold here in the near term, so we can't rule out a potential snapback, but the trend is decidedly bearish for the 10-year yield, i.e. bullish for bond prices. Global markets are testing support. Here's the ACWX, the iShares, MSCI, ACWI, XUS ETF. Above the 200-day, above the 50-day, pulling back to kind of test that support level now. We think support's going to hold, and that's premised on the RSI remaining in bullish ranges. So momentum remains with the bulls here. We are above support at the $45 level. I think as long as that $45 level holds and we remain above the moving averages, the global markets are likely to continue to trend higher, and you can see we're testing support relative to the S&P 500 for the time being as well. So one of the themes that I've been kind of going with is to investors to start to shift some of their equity allocations to the global regions, which are beginning to outperform the market. So start to do that work. I think it makes sense. Or if you just want broad global exposure, a fund like ACWX makes a lot of sense as well. And speaking of names with global exposure, ctrip.com International, CTRP, is our bullish stock of the day today. Bullish stock, strong trend, strong industry group. This is a Chinese company. Market and model are in agreement here as we're starting to see a personality change. Very bullish stock, outperforming the market. It's entering an oversold condition as Chaikin money flow is bullish. Stock is above the rising long-term trend line, gap higher following earnings, and it appears to be coming out of that consolidation. Now, the stock triggered one of our proprietary buy signals today. This one, a money flow buy signal. So I think it makes sense to get involved in a name like CTRIP here on the long side. Ticker symbol CTRP looks like a good addition to the portfolio here today. So that's going to wrap it up. Head over to ChaikinAnalytics.com/today. Sign up for that free email so you can follow along with this show. A lot of the content for this show comes out of that email. As well, there are daily stock ideas for you to consider. Not just blindly follow, but consider them. Do the research. Delivered to your inbox every morning before the market opens. Usually around the 9:15 time frame. I want to give a special thanks to stockcharts.com. They host this show in the 9:15 slot every day. I'm actually going to be on their Market Watchers live show later today. So if you're around lunchtime and want to tune in, I'll be on that show, as well as See It Market, which posts this show every day on their website. And if you like what you're seeing here, if you're getting value out of it, help us spread the word. Share our link on social media. I will be back here tomorrow, as always. I hope you all have a great Thursday. I will see you tomorrow. Have a great day, everyone.